Hi everybody, happy Thursday. I'm Laura Heigl with Century 21 Sheets, your key to the finest homes, and I'm hanging out with...
I'm Jordan Reichmann with Milestone Home Lending.
You see us together some, and we are just kind of having a conversation about money today.
Money. My favorite topic.
Favorite topic for you, necessary topic for me, because if you're going to buy a house...
Got to have some money.
You've got to have some money from someplace. And one of the things I think we're starting to see is some interest rate changes. Talk to me about what's going on.
Right now, they're the highest they've been in 7 years. They're hovering right around 5%, which isn't crazy high. I mean, I think when I bought my first house, I was at 6%. So it's not crazy high, but we've been kind of spoiled. So they are starting to go up again. Big picture, it's good. Our economy's doing well. You know, people are working and things like that. So overall, a good thing, but it is important to talk about because it can reduce buying power, or it can make some people a little less comfortable with their payment.
So yeah, let's talk about that, because I get a lot of first-time home buyers coming in having conversations. So you say that, but put that in numbers for me. If I bought a house now versus
6 months ago.
All right, 6 months ago is good.
So 6 months ago, I ran a couple of quick numbers right before we started this. If you were to buy a $200,000 house, assuming good credit and only 5% down, since we're talking about a lot of first-time home buyers don't have 20% down. So let's say only 5% down. 6 months ago, your rate probably would have been around 4.5% maybe.
Okay.
Your principal and interest payment at that would have been about $963 a month.
So $963.
You still have taxes and insurance, but
right.
all that fun stuff. But comparing apples to apples, today at 5%, your payment's going to be closer to about $1,020 a month.
Wow.
So almost $60 a month,
right?
Which, you know, some people say, well, whatever, I pay more than that for my car wash subscription. But $60 a month can make a huge difference in whether or not someone qualifies, and certainly whether or not someone's comfortable with that.
Right. So you pay more right now.
You pay more, absolutely.
And it impacts buying power.
It does.
So pay more and buying power reduction. Yes.
And why does it affect buying power? I look at several things, but one of the big things I look at is your debt to income ratio. First-time home buyer, you may be right out of school. You know, maybe you're only making $30,000, $35,000 a year. $60 a month can make a big impact on whether or not we can get that approval to go through. So, so it is important to call your lender, get pre-approved, but also follow up as as a month, 2 months, 3 months, 6 months goes by, because it does change and it does.
So one of our assumptions is it's going to go up again.
Yes.
And people ask me, so they probably ask you even more, so what's going to happen to interest rates?
Yep.
We know they're going to go up, but the Fed never calls me personally. Do they call you?
They don't call me. No, I hear about it at the same time you do.
So crystal ball is cloudy, guys. We don't know what it'll go up to, but we know it's going up.
It's probably going to go up. They've said next year in 2019 there'll be at least 3. Again, no one has a crystal ball,
right?
But they're anticipating 3 interest rate increases from the Fed.
So if we look in the last 6 months, it cost us $60. It would be reasonable to say in the next 6 months it could cost us another 60, and now we're at 120.
That's
So this is something, if you're thinking about buying a house, you probably need to maybe escalate your thinking about it and start the process.
Talk to someone. It's easy. It's free.
I'm
a pretty nice guy.
Thing. It is free.
It's
free to call you and sit down and have a meeting.
Absolutely. And we'll go over what you can afford and what you can afford for what you're comfortable with.
Okay, so guys, this could be an hour-long conversation, and I promise we're not talking in this video for an hour. We're not going to do that. But this is where qualifying and having your ducks in a row is super important. So last spring, I had a buyer that came to me. Jordan did not pre-qualify them, so this isn't Jordan's deal. I just want full disclosure on that. But they thought they were pre-approved for a loan, and they found a house, and we got it under contract, and they had the home inspected, they had the home appraised, the home, so those costs are about $1,000 out of pocket for perspective, and then they got a loan denial. And what happened is when the loan went into underwriting, the underwriter found blips in their rent payments that they had not mentioned initially, and so all this came up as a surprise. So
after they'd spent $1,000.
After they had spent $1,000. So they didn't get to buy a house, and they didn't get that $1,000 back. So it's really good to cover these bases in the beginning so this doesn't happen. And what do you need from somebody, Jordan?
So, and you hit a very good point. So what I need from somebody, I need transparency is the biggest thing. I can figure out your income with your W-2s and your pay stubs, and I can see how much money you have in your bank account. But what you just said, the verification of rent, that's not something that we can necessarily get right up front. That's something that you call a week or two in once you have an accepted offer to get that a lot of times. So if you've had a late payment, tell me about it. We're probably going to find out about it. We don't always have to verify rent, but let me know about it. Other things we get tripped up on is if you owed money to the IRS and maybe you're on a payment plan, that's fine. We can still do the loan, but I need to know about that because we do put that into your debt to income ratio. Another one I see a lot is child support. If your paychecks are getting garnished, obviously I'll see it. But if that's not on a paycheck or anywhere, it may not come out until 3 or 4 weeks in, and at which point you've spent, $500 on an inspection, $500 on an appraisal. And for a first time, well, for anyone, $1,000 is a lot of money to.
I don't want to lose $1,000.
Yeah, I don't want to write a check and get nothing for it for $1,000. So I would say those are the three biggest things. The other thing to keep in mind, a lot of first-time home buyers, if they're looking at condos, one thing we take into consideration is the association dues. $150,000 payment on a single-family home with no homeowners association is a lot different than a $150,000 condo that has a $200 a month HOA. So I would say those are the biggest things that get tripped up on, and we can't necessarily know up front. So when you're talking to someone about what you can be pre-approved for or what you're comfortable with, make sure to include, if you are paying child support or if you're receiving child support too, if you do have an IRS tax lien or payment plan that you're working on. There are things we can work through, but we need to know about it.
So what about late payments? What about making credit card payments late?
Late payments, we see that generally on the credit report.
Okay.
The rent is an important one though, because not all landlords report to credit bureaus because it costs money.
Interesting.
So if your loan does require a verification of rent though, and we find out you have a late payment, that can severely affect your ability to qualify, especially with a first-time home buyer who maybe has limited or no credit history. We're going to require a verification of rent. And if there are late payments, that's a problem. So, we want to know that up front before you spend money on your appraisal or your inspection, or before you spend money on anything, really.
So here's something I want you guys to know. If things are not perfect at this moment, and for a lot of people it's not, it may mean that you're not ready to buy a house today. But go sit down with Jordan.
Call me. Like we talked about, it's free.
Get a plan.
Yes. I'll run your credit. We can talk through any issues that maybe your creditor aren't blatantly obvious, but you know about. We can talk through and we can figure out how can we make this work. And again, I'm not going to pressure someone to buy right now. Interest rates are going up. But if someone can't buy right now, I'm not going to.
You're not going to beat them with a stick?
Yeah, I'm not going to let them get 3/4 of the way down the road and then you say, oh, by the way, sorry. It's something we can talk through, and we can prepare you to buy in 6 months or a year or whatever the right timeline is for you.
So I love that. Quick story. Years ago, I had some buyers come in to talk to me. Jordan was probably 12 at the time. So
oh, come on.
He wasn't loaning money. But when a lender looked at them, they were just a mess. There was no way they were going to buy a house. They were a mess. But they got a plan of how to work through the mess. Doesn't happen overnight. You can't fix everything overnight, but they got a plan. And it took 2 years, Jordan, but they did everything they were told to do, and they got to a point that they were able to buy a house. And when we got to the closing table and those people were handed those keys, I watched this big, tough man burst into tears.
That's awesome.
And it turned out that he was the first person in his family to ever buy a home. So his parents were not homeowners, his grandparents were not homeowners, but it had changed the whole future because they were putting their family in a home. But they worked really hard to do it, and it wasn't an overnight thing, but they had lates, they had collections, they had all these things, and so they took a lot of time to clean it up.
Well, and that's important. I mean, it can be cleaned up, and there are things you can do, but like you said, it doesn't happen overnight, and the buyer has to be willing to put in the work. I look at several credit reports a day. I'm not a credit expert, but I can give some pretty good guidance, for those people that do need to help to get cleaned up, and.
So here's the deal, guys. If you're ready today, and you may know some of these pieces, you may not, it's a good time to really think about getting your pre-approval with Jordan and getting started in the process, because your buying power is definitely going to go down as our interest rates go up.
Absolutely.
So it's a good time to make a move forward. If you're not ready today, but you need some help getting a plan, it's also a good day to make a phone call.
It absolutely, and because that's the key thing. If you don't know where to start,
right,
what do? The cycle just continues. So give me a call today. We can talk about what you have going on. My cell is 317-345-1717, or you can always email me at jordan@mortgageswithjordan.com. We can discuss what your situation is. If you're not ready to buy now, how we can get you ready, and just get you comfortable with the whole process.
So the really fun part of buying a home is looking on the internet and going and looking at the houses and looking at floor plans and talking about all the things that we talk about in the process, but ultimately the loan's got to be there.
Absolutely.
The money has got to be ready, and you will enjoy the rest of the process a whole lot more when you have everything up front that you can have put to bed for your loan.
And know what to expect.
And then the fun starts. So that's what I've got for you today. Those of you who are thinking about it, I want you to call Jordan.
317-345-1717.
Get a pre-approval. He'll shoot it to me, and then we'll find a house. So thanks for watching. I'm Laura Heigl with Century 21 Sheets, your key to the finest homes. You are
Jordan Reichmann with Milestone Home Lending.